Okay, testing. 1, 2, 3, testing 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France, they mainly in Japan. So, good morning, everybody. Welcome to Forex.Today, the YouTube community of many currency traders. What is it again? I keep forgetting. I don't know why I keep forgetting. 17,000, 18,000, 19,000, 18,000, 18,000 something. Currency traders. I mean, think about it. That's a lot because it's not a very big industry. So that's amazing. So thank you for being part of the community and all the positive energy that you put into this thing we call Forex. Let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, however, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. By the way, just on that thought process, the New York Yankees won 13 games in a row, which was a club record, and now they've won 2 out of 10. So you're like, we're on fire. Nobody can beat us. And all of a sudden, we can't win a game. Our life depended on it. But anyway, so that's past performance does not predict future results. So anyways, hola, ni hao ma, jumbo, Ohio. It is approximately 8 o'clock in the morning, New York time. Got my Superman going on. That's pretty good. Today we will conduct, I don't know, I think we'll just watch the ECB conference. How about that? So right now, pound is strong, euro's weak, yen is strong, dollar's weak, mixed bag across the board, really hard, because usually these things correlate a lot better. So maybe it's the ECB, maybe it's the Fed, all that kind of stuff. It's also Thursday, so we get weekly jobless claims. I think it's today, even though Monday was holiday. But anyway, so, hey, it's a Thursday. Great. If you're my swing trading group, we will meet today at 2 p.m. And we will set up trades for next week. Very nice. So all of that. Okay. Henry says, Wayne, we love your screens. What, this stuff? Cool. I love them too, to be honest with you. I broke my triple screen laptop in New York. I guess when I came back, it got smashed. So I have to re-up. Get some more. So I feel incomplete now. How could I get by with only one screen on my laptop? So anyways, yeah, I like the screens. I like to be able to see. I like to spread out, big man spread. So anyways, thank you for being here. Thank you for being a subscriber. Thank you for leaving comments. Thank you for clicking the thumbs up button. Thank you for asking good questions. Thank you for answering people's questions that that need help. I mean, there's a lot of people in this community that share with others, so I appreciate that. Okay. Henry's like, no, on my webcam. What, this one? Oh, I don't know. I look in the mirror and I'm like, what happened to the pretty young man? Anyways, so what else? I'd like to thank Traders Away for being part of our community. And bottom line is we all need a broker. And yes, you want fast execution speed. There's no doubt. So you probably have tried brokers. You click the button, nothing happens for 1 or 2 seconds. Hey, that might be because they're slipping you. Oh, that's not good. You want reasonable spreads. Because if you are getting slipped, it's probably because you clicked on an advertisement and the broker said they'll give you the cheapest spread on earth, but then they just slip you in and slip you out. So you're really not getting what you're advertised. So that's not good either. I mean, just think of, there was a time I remember the NFA ruled against a major broker in the United States, and they said, look, if you're going to program it in to your procedures to slip against your clients, well, you should also slip for your clients. So they had to send out an email. They're like, we're not going to slip against you anymore. We're also but anyways, it was just funny. So it was actually built into the model. So they're like, oh, well, our spread is 0.2 on the euro. 0.2, that's amazing. Plus a half slip on the in and a half slip on the out and whatever. So it's actually quite a bit more. But whatever. So that can happen. So I think you'd rather have someone that executes fast and actually charges what they say they're going to charge you, and that should be competitive, right? Hey, when it comes to swaps, they should pay you your swap. They shouldn't keep it. Some brokers charge you negative swap when you're short and negative swap when you're long. Well, that's bull hockey. So anyways, Trader's Way pays you your swaps, and the full swaps, as far as I can tell, they're huge. Cool. All of that's really good. And over the course of time, they may, because of these things, or maybe because of world-class customer service, they'll earn your loyalty and respect. And that's really what you need. Trust me, that's really what you need. TradersWay.com. So I got stuff going on here. How about this? The monetary policy press release from the ECB today. Yeah, that's it. Look, you can read it. Look. And then in 21 minutes, we got the press conference from the ECB. Okay? Huh? What do you think? Time goes by so slowly. Time goes by so slowly. So we'll get back to that. Let me put them on the tabs in the same window. All right, so we got that. That's golden. Great. So like I was saying before, pound right now is strong, euro's weak. Okay, that's weird. Aussie was strong, weak, strong. Kiwi was CAD. So this is Asia Pacific, but not Canada. So it's not commodities. And dollar was strong, weak, and yen was strong. Mixed bag. So I look at that and say, hold your horses, is what I say. And I have to make some decisions. Do I day trade while I wait for my swing trades? All that kind of stuff. I haven't quite made that decision yet. It really depends on a bunch of things. I hate macro. I'm a lover. I dislike trading macro strategies when yen and dollar disagree. Okay. I dislike it when commodity currencies don't agree. Okay. So anyway, I caution myself right away. Did you guys get the industrial data out of China? 13-year high. Interesting. That might be good for global macro. I'm sure you're reading these reports. I know you must be. Cool. WTI, my oh my, WTI, still not doing what we asked, which is good. Okay. And now it feels like it's trying to get to 70, but what we were asking it to do, remember, buy at the bottom or buy on the roll reversal, right? You guys remember that? Okay. Oops, delete. Okay, right? Do you remember? Buy at the bottom or buy at the roll reversal. If you're a bull. Not bull on oil, but bull on macro. Okay, cool. If it comes down here, range bound. If it goes there, trending. That's it. So you're doing it or you're not doing it. but Wayne, but not interested. You're either doing it or you're not doing it. Cool. Gold. What? Okay, that's a caution, right? That's a caution flag. Okay, this is our buy zone in here. Okay, I think we talked about 1780-ish. Here, 1773 is the number. So, look, if you're a bull, that's a maybe. We might be in a buy zone. I think it might be fool's gold, which is funny because this is gold. So here's sort of the market, and this is the price point. Market point, price point. So, I don't know. I got to watch this. Like, I want to buy gold. There's no doubt. So I guess if it comes up here, I have to try to catch the dip. I'm skeptical about that, but you know, you see it's almost for sure going to happen, right? And the thing is, if it comes down here, I might try again there. The goal is to get in this trade without losing a lot of money, and then getting in here. Now, if I was bear, I would just sell at the high and target the low. Okay. Okay. Diago said you're redoing the day trading, and Johnny's redoing the swing trading courses. Good. Right on. Thoughts on the beige book? Robin, to be honest, I have not read it. Okay, Dallas is best. St. Louis is worst, as for what you can see. Yeah. Now, check this out. I read a report this morning that the Dallas Fed president, the president of the Dallas Fed, president, I don't know if I spelled that right. Okay. While acting as the president of the Dallas Fed, traded, not invested, traded multiple times millions of dollars of real estate REITs. I'm like, wait, this public servant, like, think of it. Okay, he's president of the Dallas Fed. Okay, great. So he's smart. Traded, not invested, traded, bought and sold, millions of dollars each time of REITs. All right, so your net worth, think of it. You have a house. You have retirement savings. Okay, you have other types of long-term investments. Okay, and then, okay, because you remember, this guy is not a meme stock flipper. Okay, so so he's got investments in real estate, investments in a retirement account, again, which you can't touch without paying penalties. Then you have other investments, right? But again, long term. And then what? You have some risk capital, which typically is a very small portion of your net worth. And this guy's flipping millions, several times, like throughout the year. Yeah, buy 2 million of that, dump 3 million of that. Like, while acting as the president of the Dallas Fed, which is a very important Fed. Well, that's interesting because obviously people might be worried that there's inside trading, and he was anti real estate while doing this. Meantime, he was buying real estate trusts. So I don't know what that was all about. But the interesting thing is, this dude, if he's flipping 2 million here, 3 million there, It's got to have a net worth of what, 25M or more? So you might want to look that up. You're like, what? Seriously? Like, where did you get this money? From the government bank account? Anyways, right? Right? That's South Africa style. You're like, wait, what? You're flipping 25 million? How come you have 25 million and I ain't got shot, right? So anyways, somebody should probably audit the Dallas Fed and make sure all the money's still around, right? Anyways, I just thought that was good. I'm like, wow, really? A government official? It's got what, 30, 40, 50, 60, 100 million in the bank? You're like, oh my God. Now, what you'll probably find is he's a Harvard grad, probably worked at Goldman Sachs, and became a public servant because he's got 300 million in the bank and has nothing else to do and wants to feel important. Probably, right? Probably more like that. So, my recommendation for you is you should go to Harvard when you're 20, then go to Harvard Business School when you're 23 or whatever, and then you should work at Goldman Sachs and become a partner. That's what I recommend. Because it seems to work really well. Hey, I took a break for a while and back to trading. Right on. Welcome back. Yeah, a few people have sent me emails recently that they took breaks and now they're back. Good. Well, good time of the year to come back. Good for you. Smart. Wicked smart. Mr. Kennedy's like, hey, if it's legit, it's all good, right? Yeah. I don't know, though. I think there's going to be quite a bit of skepticism that you're a public servant and you're going out making speeches that are considered, market influencing. Like you go out there and you're like, the real estate market sucks. It's way over leveraged. I'm very concerned as the president of the Dallas Fed. And then meanwhile, he's short selling REITs. That would be a problem. Do you understand? Where he sells the REITs and then goes on TV and stands in front of the Wall Street Journal and says the real estate market is vulnerable to a crash. You can see like that could be a problem. That's not inside trading, but it's market manipulation. Okay, so if he's doing that, dude, we might have a very powerful public official that is not going to go to jail. He'll pay a fine. How much did you rip off? Oh, I ripped off $20 million. Well, you must pay the SEC $2 million and you won't have to go to jail. Okay. Right? Good deal. All right, here we go. So I've been sort of, I have a problem here. Okay, I have a problem here. And maybe I should ask you. What question do I want to ask? Okay. Okay, I had to restate my question a couple of times. All right. I have some Bitcoin coming my way. help me make a decision. Should I delay the transfer of Bitcoin or should I take it now? So the question is, in the next day or two, if I receive the Bitcoin, I could receive it now at 46 and all of a sudden in an hour while it's being confirmed, it drops, boom, and it drops $3,000. Or in the next day or two, maybe it goes up 1,000, maybe it goes up 2,000, maybe it goes up 3,000. The issue is I'm clearly in a vulnerable price. So would it be a good time to say, yeah, give me the Bitcoin soon, because I could just hold it and in a week doing nothing, it goes from 46 to 50 and I make some cash. But, or maybe it's on its way down to 40 and I lose some cash while I sit on it. Okay, so please complete the form and give me some advice. Gimme, can't you see? Sometimes your words just hypnotize me. Okay, Pete's like, buy it now. Well, the thing is, these things still take 2 or 3 hours, right? Robin says, you mean like leverage? No, I don't mean a trade. I mean a transaction. Okay, 51 votes. That's statistically relevant. Thank you very much. 55 votes. No, they're not trades, guys. It's just money. I'm talking about money. Payment. Okay. You guys are thinking like traders and not like businessman. Okay. Hold it for 24 hours. No, the issue is like, send me the money now. And then in 3 hours I get it, but it might fall in value and now I've lost. Okay. Anyways, cool. So half you think higher, half you think lower or no change. So I guess if you say no change or higher, okay, that's 66%. I know you're saying that's 65, Wayne. Don't be a jerk. Okay, 65%. All right. So 2/3 of you roughly say sideways to up. So I guess that says do it. All right. I guess I'll do it. Thank you. Where did my ECB conference go? Oh, it's over there. I see it. Getting close. So let's move on. I'll let that run in the background. That's not too annoying. By the way, thank you to those who have joined the day trading group, the special group for swing traders to trade with me daily instead of weekly, or as well as weekly. Thank you for doing that. I'm glad that works. Dan says, or don't transact in Bitcoin. It's crap. It's not crap. It starts Sunday, Mr. Kennedy, and goes until I think it's the 10th of December. All right, so I got some interesting things going on, and the pound might be that first mover. So this means I'll probably start getting on some of these trades, which is nice. Got to do my roll reversal, which is nice. This is setting up fine. Remember, I want this to go down, and that's a breach of the 21, so a higher high, higher low. Kiwi dollar, Oscar Mike, and some Aussie dog. Okay, so that's good. So I have something to do today, which is really nice. Well, Darko says I could do it in USDT, right? Tether it. So a couple of months ago, I think it was. Oh, it was right before I went to New York. I received a payment in Bitcoin, and I held it for 4 days and made $3,000 and paid for my entire trip to New York. So I kind of like that. I'm still a trader, I guess. But the idea is it wasn't a trade. It wasn't leverage. It was literally like somebody cutting me a check. But I was able to get paid in an asset that appreciated, 30% in 3 days. But I just don't want to lose it, right? So anyways. Yeah, Medela says it's gone down, right? And that makes sense to me as well. Yeah, Mark, yeah, a few people have signed up. A few people have the special link. I'll send out an email to people in the swing trading group. A couple other people said, hey, man, I used to be in the swing trading group. I want to rejoin the swing trading group and then join the day trading group. So I'll have to help them with that process. Basically, you got to re-up. You got to rejoin the swing trading group and then upgrade your account. Also, if you just want to join, just log into fxbootcamp.com and locked inside your swing trading area. You know how you log into the war room where you got to go to the swing trading area, and then you open up the menu and it's got the recordings and it's got the tab to log in. There's a new tab that says upgrade to the day trading course, and that'll give you the link as well. Okay, so that's one way of doing it as well. So just log into FX Bootcamp, go to the swing trading area. So if you're a member, that area is unlocked, and then there's a new tab that will take you to the website so you can join the day trading group. Okay, so that's that. All right. Chart number 3 is USD CAD. USD CAD. Okay. So that's good. So it looks like I got work to do. I got some work to do. Very nice. I'm super happy. So I'll be trading Asia tonight. Lovely to you, mum. Yeah, right on, Davey. Man, I wish COVID is over. I wish COVID was over for many reasons, but there's so many of you guys I want to hang out with, right? David's one of those guys. I think David's probably a fun guy. Hey, Davey. Yeah, man. But COVID, man, screws everything up. I guess there's really nothing good about COVID except it's making some people very, very rich. Mark says, what time will be the meets? 9 p.m. Eastern, 3 p.m. Eastern. I guess what I can do is remove the URL and just show it to you. September 12th, so that's Sunday, to December 10th. Okay. 9 p.m. in the evening, so Sunday at 9. And then the next day will be Monday at 3. And then it'll be Monday night at 9, which is in Asia Tuesday. You have to understand. So all that kind of stuff. But you have to already be a member of this swing trading group. Okay, it's for swing traders only. Well, David's like, as soon as the travel opens up, he'll come to the United States. As soon as travel comes up, oh, I'll leave the United States. So anyways, just stay put, man. If you live in paradise. Get a picture, everybody. I'd be up there. Wouldn't it be funny to see someone go up and do a selfie and then sit back down? That would be too funny. Man, she's cool, man. I like Lagarde. She's cool, man. Yeah, India, I love India, man. It's just hard to trade currencies there, right?
Good afternoon and welcome to our press conference. We are joined here on stage today by
a green tie. What is this guy doing?
And by ECB Vice President De Guindos.
Who the heck wears a green tie unless you're Irish?
May I kindly ask those journalists who are going to ask a question to turn on their camera so we can see their faces. I will now give the floor to President Lagarde. President Lagarde, please.
Thank you very much, Wolfgang, and good afternoon. The Vice President and I welcome you to our press conference. The rebound phase in the recovery of the euro area economy is increasingly advanced. Output is expected to exceed its pre-pandemic level by the end of this year.
She's doing teleprompter?
With more than 70% of European adults fully vaccinated,
that's new.
The economy has largely reopened, allowing consumers to spend more and companies to increase production. While rising immunity to the coronavirus means that the impact of the pandemic is now less severe, the global spread of the Delta variant could yet delay the full reopening of the economy.
Dovish.
The current increase in inflation is expected to be largely temporary, and underlying price pressures are building up only slowly.
Dovish, no change in the PEP.
The outlook in our new staff projections has been revised slightly upwards, but in the medium term, inflation is foreseen to remain well below our 2% target. Financing conditions for firms, households, and the public sector have remained favorable since our previous quarterly assessment in June. Favorable financing conditions are essential for the economy to continue.
This is the euro versus everything.
To offset the negative impact of the pandemic on inflation. Based on a joint assessment of financing conditions and the inflation outlook, the Governing Council judges that favorable financing conditions can be maintained with a moderately lower pace of net asset purchases.
Hey Dan, it's not her fault.
Pandemic emergency purchase program than in the previous 2 quarters. We also confirmed our other measures, namely the level of the key ECB interest rates, our forward guidance on their likely future evolution, our purchases...
Mark, I can make that happen if you email me.
Our reinvestment policies, and our longer-term refinancing operations as detailed in the press release published at 1:45 today. We stand ready to adjust all of our instruments as appropriate to ensure that inflation stabilizes at our 2% target over the medium term.
Right, Javier?
I will now outline in more detail how we see the economy and inflation developing, and then talk about our assessment of financial and monetary conditions. Let's turn to the economic activity. The economy rebounded by 2.2% in the second quarter of the year.
Look.
Which was more than expected.
Huh? Common courtesy to
It is
click the
on
like
track
button.
for strong growth in the third quarter.
Wink, wink, nudge, nudge.
The recovery builds on the success of the vaccination campaigns in Europe, which have allowed a significant reopening of the economy. With the lifting of restrictions, the service sector is benefiting from people returning to shops and restaurants and from the rebound in travel and tourism.
Anytime, Manus.
Manufacturing is performing strongly, even though production continues to be held back by shortages of materials and equipment. The spread of the Delta variant has so far not required lockdown measures to be reimposed, but it could slow the recovery in global trade and the full reopening of the economy. Consumer spending is increasing, although consumers remain somewhat cautious in the light of the pandemic developments. The labour market is also improving rapidly, which holds out the prospect of higher incomes and greater spending. Unemployment is declining, and the number of people in job retention schemes has fallen by about 28 million from the peak last year. The recovery in domestic and global demand is further boosting optimism among firms, which is supporting business investment. At the same time, there remains some way to go before the damage to the economy caused by the pandemic is overcome. There are still more than 2 million fewer people employed than before the pandemic, especially among the younger and lower skilled. The number of workers in job retention schemes also remains substantial. To support the recovery, ambitious, targeted, and coordinated fiscal policy should continue to complement monetary policy. In particular, the Next Generation EU programme will help ensure a stronger and uniform recovery across euro area countries. It will also accelerate the green and digital transition, support structural reforms, and lift long-term growth. We expect the economy to rebound firmly over the medium term. Our new staff projections foresee annual real GDP growth at 5% in 21, 4.6% in 22, and 2.1% in 23. Compared with our June staff projections, the outlook has improved for 2021 and is broadly unchanged for 22 and 23. Inflation increased to 3% in August. We expect inflation to rise further this autumn, but to decline next year. This temporary upswing in inflation mainly reflects strong increase in oil prices since around the middle of last year, the reversal of the temporary VAT reduction in Germany, delayed summer sales in 2020, and cost pressures that stem from temporary shortages of materials and equipment. In the course of 2022, these factors should ease.
Yeah, I agree,
although
FX
fallout of
partisan.
the year-on-year
Absolutely,
inflation
totally agree.
calculation. Underlying inflation pressures have edged up. As the economy recovers further and supported by our monetary policy measures, we expect underlying inflation to rise over the medium term. This increase is expected to be only gradual, since it will take time for the economy to return to operating at full capacity, and therefore wages are expected to grow only moderately. Measures of longer-term inflation expectations have continued to increase, but these remain some distance from our 2% target. The new staff projections foresee annual inflation at 2.2% in 21, 1.7% in 22, and 1.5% in 23, being revised up compared with the previous projections in June. Inflation excluding food and energy price inflation, is projected to average 1.3 in 21, 1.4 in 22, and 1.5 in 23, also being revised up from the June projections. Let's turn to the risk assessment. We see the risks to the economic outlook as broadly balanced. Economic activity could outperform, and expectations if consumers become more confident and save less than currently expected. A faster improvement in
Hey, she's a unicorn.
pandemic situation could also lead to a stronger expansion than currently envisaged. If supply bottlenecks last longer and feed through into higher than anticipated wage rises,
Yeah, she's
price pressures
she's magical.
could be more persistent. At the same time, the economic outlook could deteriorate if the pandemic worsens, which could delay the further reopening of the economy, or if supply shortages turn out to be more persistent than currently
Right, Chuck Duck?
expected
What
and
a
hold back
child. So
production.
childish.
So let us look at the financial and monetary conditions now. The recovery of growth and inflation still depends on favorable financing conditions for
BF.
all sectors of the economy.
That's actually funny. I
Market
have tears
interest
running out of
rates
my
have
eyes.
eased over the summer, but reversed recently. Overall, financing conditions for the economy remain favorable.
Of course, you put in trillions of euros.
Lending rates
Gee
for firms
whiz.
and households are at historically low levels. Lending to households is holding up, especially for house purchases. The somewhat slower growth of lending to firms is mainly due to the fact that firms are still well funded because they borrowed heavily in the first wave of the pandemic. They have high cash holdings and are increasingly retaining
Euros
earnings,
tanking,
which
guys.
reduces the need for external funding.
Look at Euro tank.
For larger firms, issuing bonds is an attractive alternative to bank loans. Solid
Euro's
bank
tanking.
balance sheets continue to ensure that sufficient credit is available.
Well, at least on the 1 minute
However,
chart.
many
But
firms
it's
and
losing against
households have
everything.
taken on more debt during the pandemic. A deterioration of the economic outlook could threaten their financial health. This in turn would worsen the quality of banks' balance sheets. Policy support remains essential to prevent balance sheet strains and tightening financing conditions from
Notice it doesn't say
reinforcing each other.
European Union. It says Euro system.
In conclusion, the euro area economy is clearly rebounding. However, the speed of the recovery continues to depend on the course of the pandemic and progress with vaccinations. The current rise in inflation is expected to be largely temporary, and underlying price pressures will build up only gradually. The slight improvement in the medium-term inflation outlook
Well, the problem is this.
and the current
So I
level
bought
of
some
financing
European bank
conditions
stocks,
allow
and this is going to
favorable
delay their
financing
ability to
conditions
earn a
be
decent
maintained
spread, right?
with a
So
moderately lower
it's not
pace
going
of
to
net
be good
asset
for
purchases
those stocks.
under the PEP. Our policy measures, including our revised forward guidance,
I don't
and
know,
the key
Manus, but
ECB
it
interest
is
rates,
interesting that it says that,
are
right?
key to helping the economy shift to a sustained recovery.
It's not the
and
union,
ultimately to
but it's a
bringing
system
inflation
of the
to our
union.
2% target.
So interesting, right?
We now stand ready to take your questions. Thank you.
Okay, Euro tanking.
Thank you. And today the first question goes to Tom Fairless of the Wall Street Journal. Tom, please.
Hi, thanks very much for taking my question. Yeah, I had two questions.
The only thing
first
weaker
was,
than the euro
on the
is the
pace on the
rand.
discussion around reducing asset
Dude,
purchases.
wearing a T-shirt.
And
Dude, you're
some of
fired.
Your council members have suggested that they would like to see the program.
Fired right then and there. What is he wearing? Lululemon pants too?
Would you characterize this, or did you characterize this internally as a taper, or is it a turning point, or how would you
Fired.
How would you characterize the move? And the second question was around why you feel confident enough to do this.
Seriously.
Your 2023 outlook for inflation is 1.5%, which is some way below.
Yeah,
your,
go on TV
medium-term
and
target.
represent our
There
firm
also seems to be a lot of uncertainty
on
in the
international
economy around Delta, around slowdown
television.
in China. So
because it's also
why
on
did you
TV,
think
not
this
just
was,
YouTube.
Yeah,
wear a
reducing
dirty
your
stretched
stimulus
out
was the
T-shirt.
correct move? Thank you.
Well, thank you so much
Seriously,
for your questions. I would preface my response to your first question by a quote, actually.
Yeah, like, gee whiz.
The lady isn't tapering.
That's disgraceful.
Because what we are doing is recalibrating PEP, which I remind you is the Pandemic Emergency Purchase Program. And we are recalibrating just as we did back in December and back in March. We're doing that on the basis of the framework, which is a joint assessment. So we look at the financing conditions and we concluded that they remain favorable. And we do that on the basis on the inflation outlook. And as you rightly pointed out, our inflation outlook has been
hey guys,
upgraded.
I sometimes wear cufflinks to our live streams out of respect for our profession. I mean, come on. You don't see me showing up in a stretched out T-shirt and Lululemons on.
Whole horizon that we look at. We also look at other indicators, and on those
right on, Robbie.
As well, there's been a
Robin and stealing
of the inflation numbers.
Stealing pips and breaking hearts, huh?
2 and 23. So on the basis of that joint assessment, and because we know that we need to keep favorable financing conditions, this is the commitment that we have, and this is what we agreed in December.
So the question is, are European banks having problems with liquidity and funding? No. So like, come on.
Pace of purchase, and of course the choice of words is relevant. It is moderately lower than what we have done in Q2 and
good. So let's take a look around.
Are we confident enough?
Well, this is good.
You know,
I got some work to do today because this is good. I have to trade these bounces.
And what we are seeing is clearly an improvement on many fronts.
Okay, this is interesting. CAD giving back.
The output numbers are much higher. The inflation number have been upgraded, as I just indicated. The employment numbers have also been improved, and the unemployment situation is serious.
Probably off 77, right? 27.
So on the basis of all that and the success of the vaccination campaign, which we have all along said was critically important to determine the economic
I got some
recovery,
trading I need to do.
we believe that the euro area economy is rebounding. And that gives us the confidence to take the measure that we have taken, which, as I said, is a recalibration of our pandemic emergency purchase program for the next 3 months.
Thank you. The next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, over to you, please.
Hello, and thank you for the opportunity, and nice to see you on Webex. President Lagarde, I have 2 questions. My first question is on financing conditions. For how long will the ECB preserve favorable financing conditions to support the recovery also after the COVID crisis? In a sense,
so I see these guys working from home and I'm like, this is why you don't want to be a journalist major covering economics.
And my second question is on
clearly it doesn't pay well.
Coronavirus crisis
I was even surprised, like when you work for big firms like the Wall Street Journal and you're a super powerful journalist, but you clearly don't make much money. It's just like, wow.
How the Governing Council intends to judge.
Should have worked for Goldman Sachs. So if you know economics, man, you should have worked for Goldman Sachs.
Given that PEP will end when the COVID crisis phase is over. Thank you.
Well, thank you. Thank you very much. And it's very nice to see you as well. This is a significant improvement from previous press conferences. So we're probably heading in the right direction here. next step will be to actually see each other with appropriate distance between us. On the
Very nice.
commitment,
You know, for example, I'll let her talk because she's not going to answer anything. But for example, like I was thinking about, I did a class on venture capital through Harvard Business School, and we had some venture capitalists, you know, live stream in from their homes, and one of them was private equity, actually, which we looked at as sort of a subcategory. Well, it's all alternative investing, but like it's similar but different. Let's just say from venture capital, and we want to see that. And he was from Bain, if you guys remember, if you know Bain and Company. Anyway, so he live streamed from his library in his home in San Francisco, and you're like, yep, that's what I'm talking about, right? Like unbelievably successful and unbelievably wealthy,
in such a way that
and he's just helping out, good class, doing, you know, oh, let me tell you about what we do at Bain in our private equity. You know, he runs a private equity arm of, you know, Bain and Co. and stuff like that. And it's, boom, that's just what you want to see. Like, oh yeah, nice library. Okay.
2%, which is
So clearly the guy's got a $40 million home in San Francisco, right? And you're like, yep, that's what I want to see. He's rich and he's powerful because he's successful. And then you see powerful media people, and they come on and they live in tiny little apartments. I've actually seen where like you can see fridges in the back, like they live in a tiny apartment. There's their fridge. There's pictures of their kids and stuff like that. And they clearly don't have a lot of money, but they're very, very powerful. And it's like, okay, maybe they're servants in a way, public servants. But like, dude, maybe if they knew economics so well, maybe they should work at a firm and make a ton of money. I don't know. I guess I'm being judgmental.
unanimously.
But it's interesting where people,
To continue to deliver
you know, there's a level of power that sometimes doesn't line up with
conditions.
compensation.
We have not discussed what comes next. And this is something for which we will prepare in the months to come. And I think there will be more interesting matters that
Yeah, I am, but I still think it's interesting though, Dan. Like,
will be informed.
I equate power with money, right? So I'm saying this might be a flaw, but it's interesting to see a powerful person that's working in a tiny little apartment. They have a broken down little car, and you're right, and yet they can move the markets and make billions of dollars change hands because they write something. Right, that's true. They might don't, but it seems to be across the board.
President Lagarde, some of your colleagues, including Jens Weidmann, have recently emphasized the upside risks to the inflation outlook, and that the higher inflation could prove more permanent than currently expected. Could you tell us whether this view is widely shared within the Governing Council and what the discussion was like at this week's meeting? Then a question on your monetary stimulus. How much notice will you give markets before the PEP comes to an end?
Sorry, I completely missed your second one. How much what?
How much advance notice will you give markets before the PEP comes to an end?
Okay. Well, thank you for the first question, because I'm going to take advantage of that one to say
Yeah,
a little
totally,
bit
right?
about
Yeah.
inflation and how
Yeah, he's
we
and he's in
conduct
an
our discussion
office
on
for
inflation.
crying out loud, huh?
Because
He's like, I got to do this. I'm going to be on international television. I got to do this from the office.
people
Good.
are seeing prices increase, and they can feel it. So we have to really go under the skin of inflation before we actually assess whether it is temporary, whether it is going to last, and that leads us to the conclusion of our inflation outlook, which, as you know, is 1.5 at the end of the projection horizon. So what do we have at the moment? We have essentially three factors that are driving prices up. The first set of factors have to do with the reopening of the economy. I mean, this is the entire dynamic. It went down massively, and price.
So, like, to contrast what I was saying before, it's amazing to think that the president of the Dallas Fed can place multi-million-dollar trades, not investments, just flipping REITs and stuff like that. You're like, wow, really? You got that kind of like risk capital? You got millions and millions and millions and millions you can just play with? You're like, that's interesting. And then someone else that can move the market, because he can move the market with a press conference. And then someone else can move the market with a press conference because they ask a tough question or they write an article that's favorable for one thing or not favorable to the other. And you find out they're generally penniless, right? They can't afford a new car, but they can affect the market worth billions of dollars. And you're like, well, that's interesting too. Like one guy can make millions and the other, but move the market. And the other one can move the market, but can't make $1,000. So it's just, to me, it's really interesting. Is one more dangerous than the other? Like, for example, if the president of the Dallas Fed, if he's shorting the REIT stocks and then does a press conference and says, you should be very afraid of the real estate market, that could drop the market and he can make money. Okay, that's dangerous, right? But with somebody that's got nothing to lose and just has an opinion and can also affect the market, is that any less dangerous because he's got barely any skin in the game? Well, I think that's just as much as dangerous, right? Because now you don't have to be cautious. You're like, yeah, well, whatever. I'm just going to do this. I'm going to write this article. Yeah, it'll move the market, but I got to do what I got to do. Well, it doesn't affect them, which I think is almost as dangerous, right? So it's just kind of interesting. So I guess if you're a senior economist at the Wall Street Journal, I'm surprised you live in a tiny little apartment with cheap furniture. It's just like, I thought they would have more. I thought there would be a higher level of success monetarily. So anyways.
In particular. So that's the third one, the second one, which is a subset.
So anyways, whatever. Yeah, that's what right. No Fed president should be allowed to trade with being in that kind of position. Agreed. That's interesting, right? So I don't know what'll happen to it. And who is it? Kaplan? Yeah, it's Kaplan, right? So yeah, was an active buyer and seller of REITs. So he's flipping, right? But he was a yeah, see, Harvard. Oh, look at that. He was a professor at Harvard Business School. Let's look this up. He's a CEO, which is interesting, right? CEO, president and CEO of the Federal Reserve Bank of Dallas. He was senior dean, associate dean, and professor of management at Harvard Business School. Not bad. He's a philanthropist. Yeah. I know Draper. I don't know Richards. And then, of course, Kaplan Foundation. Draper Fisher Jurvetson is where he's from. Invested in approximately 110 nonprofit ventures. Okay. A board member of Harvard Medical School. See, you should just go to Harvard. He's written a bunch of stuff. Prior to joining Harvard, he was the vice chairman of Goldman Sachs. He had spent 23 years at Goldman Sachs. Became a senior director and vice chair of Goldman Sachs. See, you guys should just do that. Go to Harvard, and then boom. So you can see maybe even teaching at Harvard is a key, right? So that's one of my goals in the next 5 years. I want to teach a class on finance and investing at Harvard. Arnie's from HBS in 83. Okay. So anyways, there you go. So how can this guy have a net worth of $100 million? Well, he was the vice chair of Goldman Sachs. Oh, okay, that makes sense. Okay. So that's kind of interesting, right? But I think it's just as dangerous. Like, look how small her apartment is. Look at, there's the kitchen. She's in the living room. There's the door.
Would be more persistent. Thank you very much.
Well,
To me, that's
the first
just as
question
dangerous.
About, how confident we are. I've observed that since the beginning of the year, we have regularly upgraded our forecast. And if anything, we might have been on the too pessimistic side to begin with.
Okay.
And
I think
what
that's
look at
interesting to me.
more
That's
so
just
than,
interesting.
Analysts' notes, which I'm attentive to, of course, is the projections that are produced by staff, how they compare with projections that are produced by other international institutions such as the IMF, the OECD, and other institutions. And
That's funny, Dan.
That,
Dan says,
you know,
their real homes are
the
mansions.
economy
They're
is
just
going to
logging in from
continue
that
to
tiny
benefit
apartment.
From, further unwinding
That's
of
crazy.
containment measures during the second half of 21.
I had an apartment like that when I was 20 something in San Francisco in Market and Van Ness, which is cool. But it was nicer than that.
Back to the pre-pandemic 2019 level at the end of this year, which is 2 quarters earlier than we had initially anticipated.
Yeah, I have much respect for Lagarde, for sure. Okay, so she was the finance minister of France. Then she was the head of the World Bank. And now she runs the ECB. She's cool. She's classy. She's well-spoken. She's elegant. She's tough as nails. She'd make you chew glass if she wanted to.
In our forecast. And, our risk assessment, as I mentioned earlier, are broadly balanced. Clearly, if the pandemic is resolved faster because of
10 million doesn't sound like it's enough for him to be trading millions in REITs. That doesn't make sense.
That is going to be an add-on. If more savings are being used by consumers,
I have much respect for sure.
Which has been one of the big drivers of the recovery so far. There's still that chunk of saving that was accumulated over the pandemic period, which has not been tapped into.
Yeah, Maida brings up another point, and I see sometimes CEOs of companies going on TV and they're logging in from their pathetic little home offices. I'm like, hey, if you got money, come on, fix up your home office. But also make a studio. If you're the CEO of the company, pay 10 grand and build a little studio, make it nice. Get a freaking microphone, right? But it's things like that where people don't have they don't have proper microphones so that you can barely hear them. Their backgrounds suck. Dude, at least get a blue screen and put it behind you. Dude, take it seriously, right? But doing Zoom from your tiny little apartment, look, go on Amazon.com, pay $99 and get a big green screen that goes right behind you. And then you could even put a virtual background if you needed it. Right? Go back to the office, take a picture of the Wall Street Journal office, right? The room with all the reporters everywhere, and then use that as a virtual background. Dude, it takes 2 hours, maybe. It's $100. Come on. The company will kick you back, but gee whiz, right? It's not that big of a deal. And get a microphone. Don't use a $20 webcam. Get a decent webcam. Get a proper microphone. Get a background so you look professional, and don't wear a stretched out dirty t-shirt. I mean, it's not that hard.
Martin,
Hello.
Hello.
Madame Lagarde, can you hear me? Thank you for taking my question. So I have 2 questions. First one, is that your chief economist, Philip Lane, said recently that the amount of assets you purchase after PEP.
He's like, I'll just use my iPhone. It's all good.
Amount of debt issued by governments. Do you agree?
Okay, so look at
My
this.
second question.
He is about, what, 5 feet from the door? Okay. IKEA shelf. But he's probably a powerful dude. He's probably a very successful, very senior person at whoever he works for. He's, quite senior and all that kind of stuff. He's got poor lighting. He's got no virtual background. He's not even got a microphone. He's using his AirPods. There might not even be real AirPods. I'm like, really?
Is about the link between the ending.
It's just not that he's not wealthy, but it's like, shouldn't there be a higher level of professionalism?
There's a close link in your guidance between asset purchases ending and soon after that interest rates rising. Do you think that there should be potentially more of a gap or more flexibility on that? Thank you very much.
Well, thank you very much, Martin, for this
I mean,
question.
like, what if Lagarde was logging in from her apartment and she's wearing pajamas or her yoga pants or something, right? You're like, come on. And I bet you she's got money. I bet you Lagarde's got money. She's powerful and wealthy. So anyways, it's weird. It's just a weird thing. I don't know why I make a big deal of it.
And clarified to a great extent by including 3 criteria. One is we need to see inflation outlook at target, that is at 2%, well ahead of the end of our horizon. First criteria. Second, we need to see it through also to the end of the projection horizon. And second, we
Minister
need to
of Foreign Trade,
elements,
Minister of Agriculture, Minister of the Economy,
underlying
Finance and
inflation,
Industry.
Criteria as
The
at
first
the time
woman to
when
become
we-
Finance
so
Minister
you
of a
have these
G8
3
economy.
criterias, and you have the other elements.
Oh, I said
of our
World
forward
Bank, sorry,
guidance,
IMF.
That remain intact and which actually play a role in
First
signaling
female
to
chair of a
markets,
major international
when,
law firm.
What will be the sequence of events from asset purchase.
The best finance minister of the
to
Eurozone.
interest rate hiking. I think we are pretty far away from that, and
I mean,
it also
she's
gives
no
me a chance
joke.
to remind all of us that PEP is a very
Baker
specific
McKenzie, a
program
large
intended
Chicago-based firm,
for
huge,
the
right?
Pandemic. It has an emergency character to it.
Antitrust and labor. That makes sense.
That PEP comes to its term, then
Made
clearly
partner after
we'll
6
have
years.
all the
She's
other instruments,
crazy aggressive.
Available, and in terms of purchases, we clearly have the asset purchase program, the APP, which we have on a standing basis ever since October 2019, and that clearly is intended to be continued and will be debated, as I said, at our December meeting. So it's entirely premature to evoke it, and it has not been discussed on the occasion of this meeting. Now, clearly, when we determine our pace of purchase, we are attentive to the entire universe of bonds. We are not paying special attention to the fiscal commitment of one country or the other, or the bond issuance of one country or the other.
Not a lot.
So we look at the entire universe of bonds.
It's a little surprising.
That are available, will be available, are
It's
being
really
announced,
surprising,
and
actually.
that's how we
That's it.
determine where our purchase pace is going to be applied. But we do so, as I said, based on 2 things.
Really?
Under our joint
I
assessment.
don't think that's
One
true.
is the favorable financing conditions. The second is the inflation outlook. Thank you.
Thank you very much. And the next question goes to Andres Stumpf of the Spanish daily Expansión. Andres, please.
Spanish Daily. Hello, can
Good
you?
afternoon. Do you hear me?
Yes.
Okay, I have 2 questions. You said that the need of a PEP recalibration was unanimous. I would like to know if it was also unanimous, the pace decided. And the second question is, after the operation later this month, that would be the only chance, the final chance, there will be only a chance for the banks to borrow money at the long-term tenors and the TLTRO next December. I was wondering if the ECB has taken any decision on this regard, and if there will be any long-term funding operations.
Yeah, that's what I would say, right? Like, that doesn't seem right.
More operations, I mean.
Dude, she was
Your
chairperson of
about,
like one of the largest law firms in the world. She really understands money, business, finance. She knows everything about everything, commodities.
Was agreed.
She's got money.
Lower determination was agreed unanimously. It was all unanimous. So I'm sorry for those who like to oppose the doves and the hawks.
So anyways, yeah, so the markets are Oscar Mike, guys. This is pretty good. So I sold just below 27. It's dropped 25 pips off 27, which is fine. So we're at 26.75. Nice little short off the pivot, not a problem. Same thing occurred here, same thing occurred here, same thing occurred here. It's all Oscar Mike. I want to take a look at yens too. Yeah, back up. This one I got knocked out on 2 days ago. CAD's been a laggard. I've been ignoring that one. Kiwis resetting. Euro's getting crushed, and pound trying to get back into the game. So, yeah, good.
With representatives of the banking sector is that Teltros.
Yeah, Baker McKenzie would not be cheap. No.
More so than the most recent one, have been critically important to help them and encourage them to provide lending to the economy, which they have consistently done over the course of the last 2 years. Thank you.
Thank you. And the next question goes to Ilya Siakantaris.
It's the value of all your assets minus all your expenses or your liabilities. So it's assets minus liabilities. Okay. So for example,
we can hear you from Greece.
You have $1 million house. Oops. Can you hear this guy with the background noise? Crazy. You have $1 million house, but it's $600,000 mortgage. So you have a $400,000 in asset. Okay. Plus your investments, mark to market, plus your cash. Okay. Minus your bills. Okay. You might have a $50,000 car, but you financed it, so you owe the bank, oops, that's a minus, but you owe the bank $30,000 for the loan. Okay, so you only own $20K in assets there, and and that's how you add it all up. Assets minus liabilities.
Into account and addressed specifically, but I think it's premature for the moment to do so.
Thank you. And the next
Hey, somebody's spamming us so you can join their Telegram group and I suppose make money, but they can't afford legitimate legal advertising, but instead rely on spamming. Seems pretty dumb. Good thing they're blocked. Thank you, Jim.
For inflation has shifted and is now to the upside. And how was this reflected by the discussion of the governing council? And the second question is about the fact that many of your colleagues, including Mr. De Guindos standing next to you, have signed.
Yeah, I wouldn't say it's crushed, but it's moved. And I was watching the 1 minute. Okay.
The Basel III rules.
All right, guys, I think it's time to pull the plug.
Your name was conspicuous by it.
If you're in my swing trading group, I'll see you later today, 2 p.m.
Crucially, because the governor of the Bank of France said the timing of the letter was unfortunate. So I'm keen to hear your view on that. Thank you.
Well, do not
Trying to find the.
There is nothing inconspicuous.
I don't even know where the ECB thing is anymore. Oh, there she is. So, anyways, thank you to Christine Lagarde for, she must have put some time in practicing with the teleprompter. That's really cool.
But I'm not uninterested in Basel III.
Oh my God, they're going to talk about Basel III banking rules. Definitely a time to bail. So anyways, thank you for being here. Peace on earth. May the pips be with you. May your profits be above average. Hope you have a wonderful day. I might see you later today if you're in my swing trading group. And if not, I will see you tomorrow here on Romper Room. Till next time, right, Jeff? Cheers, guys.